Coming up on Tech News Weekly, Jason, Howell, and I have got a show for you. First, we get a double helping of Alex Wilhelm from TechCrunch. First, he joins us to talk about the impact of the election on tech and stocks before we round things out with a conversation about Proposition 22, its impact on Uber and Lyft, and what that means not just for California, but the rest of the country. Then, when we're back from the break, we talk to Paris Martineau of The Information about Amazon's plans to make rural deliveries. Before we round things out with our stories of the week, but you're going to have to tune in to check those out. Tech News Weekly is brought to you from TWiT's LastPass Studios. You're focused on security, but are your employees? Well, LastPass can ensure that they are by making access and authentication seamless, whether employees are working in the office or remotely. Visit lastpass.com/twit to learn more.
Podcasts you love
from people you trust.
This is TWiT.
This is Tech News Weekly, episode 158, recorded Thursday, November 5th, 2020. This episode of Tech News Weekly is brought to you by Wasabi Hot Cloud Storage. Thinking about moving your data storage to the cloud? Well, Wasabi is enterprise-class cloud storage at 1/5 the price of Amazon S3 and faster than the competition with no fees for egress or API requests and no complex storage tiers. Start a free trial at wasabi.com and enter code TWIT. And by Worldwide Technology. You need to maintain your critical operations and you must keep your employees safe while doing so. From idea to execution, WWT can keep you up and running and help you plan for the future, working with you every step of the way. Contact WWT today to request a consultation at wwt.com/twit2.
And by CashFly, give your users the seamless online experience they want. Power your site or app with CashFly CDN and be 30% faster than the competition. Learn more at twit.cashfly.com. Hello and welcome to Tech News Weekly, the show where every week we talk to and about the people making and breaking the tech news. I am Mikah Sargent.
And I'm Jason Howell. How are you holding up right now, Mikah?
My voice seems to be trying to leave me, but other than that, I'm hanging in there, hanging on. Yeah,
me too. I've been struggling with that all week. My voice needs to come back. What a week it is. And we're going to talk all about it. Of course, everybody's been following the election. It's kind of collectively on our mind for some reason. In the world of tech, there's a lot of influence, a lot of crossing those lines between the election and what it means for the world of tech. So a lot of direct impacts on what happened on Tuesday. And we're going to talk all about that. Joining us is our guest, and one of my favorites. I love having you on the show, Alex Wilhelm from TechCrunch. Welcome back.
Hey, it's great to be here. What a week. I'm very proud that the show is still going on. I'm surprised that we haven't all just fallen over yet. So go us for being here.
Kind of feels like that would be the only solution, is to fall over and collapse in exhaustion. And certainly, I think we've probably all had that moment at one point or another. But the show must go on. So, yes, Alex, thanks for hopping on. I was reading up on your Twitter feed, and I knew that you would be a wonderful guest to talk about kind of the tech angle, the tech aspects of this election, because there are a lot of different ways and a lot of different, different aspects of technology that have been touched by this election, both in California and nationwide. But I thought to start off with, let's focus a little bit on the stock market reaction, because sometimes that's indicative of something larger, the forces going on, in the White House, and how that extends out to the technology companies that we follow on this show. So we're going to chat about Uber and Lyft a little bit later after the break. You're going to be with us for the next half hour or so, and I really appreciate that. But you wrote yesterday about the performance jump of tech stocks almost immediately after, on Wednesday morning. What do you think, first of all, is driving some of those gains that we continue to see even today, Thursday?
So a little bit of context. There's a general sentiment that investors in the stock market don't like uncertainty. And so that when things become uncertain, stocks should, generally speaking, fall. And so when the election wasn't fully decided on election day, you would think that the stock market would go, this is a little bit weird. We don't know what's going on. We don't know what's going to happen. So we're going to just sell down a little bit. That's just not the case. And people were a little bit confused. There were a couple of ideas. Why were tech shares going up so rapidly? Well, maybe people were trying to park their capital in more growth-oriented equities. which is a reasonable thing to think. But it seems that the possibility of a Biden White House and a Senate controlled by Republicans implies to investors that there will not be any large-scale tax increases coming, and that any attempts at regulation of business will probably get tied up. So it seems that by having kind of a divided government, Wall Street thinks it's going to win, and so up went the stocks. To be clear, though, Jason, that's the current prevailing view. I don't want to say it's 100% certain that that's going to hold up long term. That's what people are thinking today.
Yeah, that's kind of what I've been reading and thinking through as well. Obviously, we don't know for certain why this happens, but when you see a large number of investors actually driving that up, they're all thinking roughly probably something along the same lines. So this idea of a divided government being better for the industry seems to make a lot of sense. Now, Democrats and Republicans both have argued about regulatory efforts, about the need for regulation in the big, especially with big technology companies. But with a split government, which at least at the point of this recording, it feels like that's where we're headed. Anything could change. How do you think this kind of push towards regulation is going to play out for these companies over the next 2 to 4 years if things are split the way it seems like they're going to be right now?
2 to 4 years is a long time to prognosticate, so I'm going to caveat this a little bit. But if you go back to the last couple of congressional hearings about Section 230, which is a bit of U.S. law that provides some protection for online platforms to not be responsible for content that they didn't post themselves, it seems that there's really two viewpoints about where this stuff should go. On one hand, the American left thinks that Facebook and Twitter should be more aggressive in taking down content. And on the other side of this coin, the American right thinks the opposite. So when you think about divided government and those two different perspectives, the chance of something very big happening seems to be pretty slim. And unless government ends up in the hands of one party or the other entirely, I don't see much happening. At the same time, though, a Biden White House would have a different FCC. They'd have a different FTC. There would be a change in political appointments to certain posts that do touch on tech and tech regulation. And so we could see a change in the wind. Ajit Pai, the current chairman of the FCC, would not be there in a Biden administration, for example, I don't think. So that would change up the views on net neutrality and stuff like that. But the scale of regulation, the antitrust, the Section 230 stuff that's been the real topic of conversation in the last 6 to 12 months, I don't see much happening in the next 2 to 4 years. But of course, things can change.
Yeah, 2 to 4 years. I do realize that's a long time to think through, and who the heck knows how this can play out. As for right now, you wrote yesterday the software as a service, cloud company stocks both rose significantly yesterday, specifically, and I haven't checked to see where they're at right now. I have to imagine that trend is continuing. What do you think investors are agreeing on that has them focusing on these stocks in particular going forward where we're at right now?
Just to bring an update, because I pulled this up before we jumped on, the same kind of basket of companies that are public are up 3% more today. So an enormous, nearly 10% gain over 2 days. The bet here is that software is required for modern business. And so companies that need to keep operating even during the pandemic cannot afford to not pay their software bills. And so these companies have very durable revenue. And during an uncertain economic time, betting on companies by buying their stocks that are going to have rock solid revenues is pretty smart. Now, the second part of this argument that investors make is the digital transformation, which is really just the kind of rising digitization of all of American business, is going to accelerate because of COVID. And if that's the case, if companies do seek more, software-based solutions to their business processes and issues, then all the SaaS and cloud companies could see a kind of secular tailwind that can make them grow faster over the next 1 to 5 years. And so if you think about them as durable and therefore a safe place to invest and possibly accelerating and therefore attractive from a long-term perspective, it's not a huge shock to see their share prices rise. Now, the question then becomes, with those two arguments, how high is too high? Can you actually overbid these things? And some people think the answer is yes, and some people think the answer is no. It depends on how bullish you are about the cloud and kind of software in the modern sense in general. But certainly investors played this trade all summer. We saw an amazing recovery in these stocks, between like July and September. And so to see them going up now as other yields fall, it's not a huge surprise. But again, questions is, how high is too high? And I would say we're a bit past that. But then again, I'm a pessimist and therefore not an investor.
What about one thing I was thinking about was renewable energy and, companies like Tesla, let's say, and other companies that kind of tap into both both spheres, technology and renewable energy. Are they seeing a surge? I would imagine, just from my own perspective, that a Biden presidency would be more friendly to renewable energy stocks than a Trump presidency. Is that kind of what we're seeing right now, where we're at?
I think it's probably too broad to say that in general, all renewable energy stocks, akin to how SaaS and cloud are kind of moving up as a unit, are doing the same thing. I think we are seeing trouble in certain traditional or old school energy producing companies because their models simply are less effective. But think about a couple of things that are going to impact the future. A Biden administration would change the possible tax credit and regulatory environment in which renewables and old school fossil fuel energy companies exist, tilting the balance more towards renewables. And at the same time, we're seeing great improvements in the cost declines in solar power. So if you think about like building new power plants today, things like solar have become so cheap they're competitive with coal and natural gas and other forms of energy production. So I think you're on the right track. I think it's a little bit too early to say regarding the stock market with these companies, but I see the world through the same lens that you do. But of course, if Trump does win, and this podcast looks very silly in a week's time, we should take all this back and throw it away.
Yeah, could possibly happen. That's the crazy thing about right now. You just don't know. This
such
one
a strange
is.
Day.
It really is. Now, this one, I noticed this morning, I hadn't really been following any cryptocurrency news for a while, but I noticed cryptocurrency is on a big surge right now. What do you think? Like, I'm unaware if you are super close or familiar with the cryptocurrency markets, or if you focus more on like the tech stocks and the stock market that we're talking about here. But are you familiar with kind of what the reasoning behind a cryptocurrency surge right now might indicate?
Well, I think it's kind of a fool's errand to explain the cryptocurrency pricing markets, but
That's true.
So to be, but it's a great question. I'm not trying to be at all dismissive. Bitcoin today is just under the $15,000 mark, and Ethereum's just over 400. And if you're not familiar with where cryptos have traded in the last couple of years, for Bitcoin, that's pretty good. It's up quite a lot from earlier this year. Ethereum's been on kind of an up and down run lately. It's a little bit harder to chalk, but the biggest topic of conversation in the crypto space has been DeFi, or decentralized finance, in the last 6 months, I want to say. And I think that's led to some general bullishness about the potential for cryptocurrencies and in general, Jason. So I think that's helping bring in more people and more interest and more dollars. But I wouldn't say that DeFi's boom is driving up Bitcoin's price in the short term. That seems to be too close of a connection to draw between the two things. But certainly, if you are a Bitcoin bull, seeing Bitcoin at 15,000 is really, really encouraging given where it was about a year ago.
Yeah, no kidding. And I think the high of somewhere in the 19,000 range, I mean, you're starting to, if that trend continues, get closer and closer to that, and people are going to freak out just as much as they did however many years ago, 3 years ago or whatever.
Yes.
Cool. Well, yeah, stick around, Alex. We're going to talk with you about the passage of Proposition 22, what that means for Uber and Lyft, not just in California, but throughout the country and maybe even further. But before we talk about that, let's thank the sponsor, and then we'll get into that topic. This episode of Tech News Weekly is brought to you by Wasabi Hot Cloud Storage. Wasabi is the perfect solution for managed service providers to sell because they can earn more while charging less. It's really a great deal for them. It's also 80% cheaper than Amazon S3 and significantly cheaper than on-premise storage. Now, typically, you can store data in Wasabi's cloud for less than just the annual cost of the maintenance fees on the same amount of on-prem storage. Wasabi's disruptive price, their performance model actually makes buying cloud storage a natural addition. And there are two ways to pay now. You can pay as you go, or you can pay one time with reserved capacity storage. Now, Wasabi's reserved capacity storage actually makes buying cloud storage a natural addition to your on-prem storage. If you're thinking about buying more hardware storage, compare the price against 5 years of reserved capacity storage, and you can purchase cloud storage in 1, 3, or 5 year increments and achieve greater discounts for term and capacity when you do that. With Wasabi, security is often even greater than on-premise storage. It provides 11 nines of durability. This means on average, you'd lose one file every 649,000 years. Hosted in premier tier 4 data center facilities that are highly secure. They're fully redundant. Wasabi is secure by default. So all data stored in the Wasabi cloud is always encrypted at rest, even if the requesting party doesn't specify encryption. Wasabi follows industry best security models and design practices. You can access the access control mechanisms such as bucket policies and access control lists can be used to selectively grant permissions. Your data will be immutable. That's preventing data from being erased or altered at all, and you'll be protected from hackers, malware, and yourself. Wasabi has active integrity checking where all objects stored are checked for integrity every 90 days. It's HIPAA, FINRA, and CJIS compliant. Wasabi is not just highly secure, disruptive technology that's turning the industry on its ear. Its storage is 80% cheaper and up to 6 times the speed of the industry leader. So calculate the savings for yourself and start a free trial of storage for 1 month. Go to wasabi.com. Click the free trial link and enter code TWiT, and you can join the movement and migrate your data to the cloud with confidence. Go to wasabi.com and make sure to use the offer code TWiT. And we thank Wasabi for their support of Tech News Weekly.
All righty, folks. Proposition 22 was one of the propositions on the ballot this year. And due to the quick and I think sort of decisive measurement, we kind of looked at, in this case, the shares of Uber and Lyft and these types of companies kind of just climbed because of this expectation. But I think before we can kind of dig into the impact that it has on the companies and how their values are at this point, we should probably take a step back. There are people outside of California, there are people outside of the US who may be going, what is this Proposition 22 that I'm hearing about? So Alex, I was hoping that you could give our listeners in other places a basic understanding of what Proposition 22 was set forth to do, and then why it matters to country or to places outside of California.
Sure. So hello from the East Coast. But as a former Californian, all electoral things from the great state of California are very important to me. Proposition 22 was a response to AB 5, Assembly Bill 5. What AB 5 did back in 2019 was take a lot of people that were currently contractors and say that, hey, these people have to be employees. And if you're not in the U.S., the difference between employment and contractor status is huge in the U.S. because healthcare is often tied to employment. And what this meant for Uber and Lyft in California was they were going to have to reclassify their drivers who are currently independent contractors that Uber doesn't pay healthcare for or really a lot of taxes on. They would have to become employees, and that would change Uber's cost structure, Lyft's cost structure, maybe make rides more expensive, maybe make their model not work at all. And so Proposition 22 was their response. It was a thing that they spent over $200 million on in conjunction with DoorDash and Postmates and other kind of on-demand gig-based companies, and it passed. And so what they've done effectively is seen AB 5 come up, be told that they had to treat their drivers as employees, say no, and then essentially get their own law passed. And now they don't have to. So in California, gig economy workers that are drivers for companies like DoorDash and Uber are going to be able to just stay independent contractors. It's an enormous coup for the on-demand companies that we all know and maybe even use. And so it's not really a surprise, given that their business model was kind of unattacked or made safe in California, a key market, a key part of the U.S. economy, that their shares then appreciated very rapidly, as we all saw earlier this week. Is that fair?
That absolutely. That was a wonderful explanation of it. Yeah, I think, kind of going into it, there was an interesting sort of you get one perspective this way, you get one perspective that way, and there was a lot of conversation around the way that the companies kind of spent money, and in some cases didn't need to spend money to push a message about Proposition 22. And so I was kind of hoping that we could talk about that a little bit, because I think that the way that it worked leading up to it, I know that it might have even been just this morning, I got an email from one of the, I think it was Instacart, kind of talking about Proposition 22 and sort of what that meant now that things were where they are. And so could you talk a little bit about kind of the effort leading up to this? And I know you're not a political analyst per se, but just the efforts leading up to this and kind of how you feel that shaped the valuations, knowing that that it went the way that it did.
Yeah, a little bit of context on the value of these companies. If you go back and look at the share price charts of Lyft and Uber over the last couple of months, they've gone down some, Lyft especially. Uber, of course, operates in other markets than the US. Lyft is only a domestic operation. So if California was kind of yanked out from under Lyft by this legal change, Lyft would lose a material amount of business during a year when it's trying to come back from kind of the abyss, from the kind of early COVID March days when no one was taking rides. So the stakes were really, really high. And that brings us to tactics and money. In this case, a lot of money. On one hand, you had kind of like labor activists, people that really thought that these companies were being exploitive. They weren't paying their fair share. They weren't treating these workers accurately. They were trying to essentially get around the labor laws, pay them less, get rid of their obligations to make their model work and therefore generate profit for themselves. Exploitation, by any other phrase. On the other side, you had the companies and some of the drivers, to be clear, saying that they really appreciated the flexibility of being independent contractors, that therefore they didn't have a boss. They could work their own hours, set their own schedule, and so forth. And so that was kind of the key tension. But what was not really fair was how much money was at play. And because Uber, Lyft, DoorDash, Postmates, and others are all multi-billion-dollar corporations with enormous budgets, they could really do two things. One, spend a lot of money, and two, use their built-in platform advantage. So if you were a driver, if I recall correctly, you might get push notifications from the different services saying, hey, this is coming up, this really matters. And so the companies were doing their best to push the market towards Prop 22's passage because it was so important to their overall viability. And it worked. Now, because I'm not a political analyst, and although that'd be a fun job because you don't actually have to know anything ever. You could just like talk about Democrats or something. I don't know. I don't really know what this means for California politics writ large or what it means for the rest of this nation. It's not clear to me if this precedent will spread, but certainly California is more on the leading edge of labor laws when it comes to gig economy workers than other states. And so it could become precedent. And if that is the case, good news for Lyft and Uber, and possibly bad news for workers, depending on your view on the matter.
Well, I'm curious to know, again, touching back on the fact that you were not a political reporter, but I thought this was interesting that Lyft and Uber were both using their apps to kind of get out the message, which on one hand, when I think about it, I'm like, okay, I guess I understand. Like Google, uses its services to satisfy its own needs. I suppose this is kind of similar to that. What's your take on that? Do you feel like that was okay, like fair of them to use their platforms specifically for this political purpose? Did that surprise you?
Well, all's fair in love, war, and labor arbitrage. So I don't know if fair
that's
is
what they say.
Yeah, that's what they say. It's a famous quote. I wouldn't worry about fair so much, but I would say there's historical precedent for it. If you think back to when Uber was an upstart company, back when it's in its early growth days across the U.S., they would often go into a new city and run into regulatory issues, taxi rules, local governments that weren't friendly to them. And what they would do is they would kind of show up. People would download the app, people would start taking Ubers, and then Uber would get in trouble with the city. And then they would have their riders essentially petition the government to let Uber off the hook so it can keep operating. So the company has a history of engendering direct action from users and drivers to try to push its own political narrative to stay viable. It's been kind of a bully in certain circumstances. It's done some bad things over time, like, well, not to go through the whole list, but just like the gray ball system that Mike Isaac documented in his book about Uber shows how aggressive the company has been. So in this case, them using their apps wasn't a surprise. In fact, I would have been more surprised if they hadn't done it. Now, is it tasteful? Probably not. Is it a platform advantage? Sure. Does it tilt power towards large companies against individual workers? Naturally. But this is the American economy, and so those things tend to be true anyways. So I don't think Uber deserves extra censure for what it did.
That's interesting to me. And like, I think you touched on it earlier too, when you said to Jason that, we kind of are in similar bubbles or have similar worldviews. It's sort of seeing the reaction to this on social media had kind of played a role in seeing, or in my perceived beliefs or perceived kind of, what's the word I'm looking for?
Preconceptions.
Yes, thank you. Preconceptions that I was coming to. So I find that interesting. Now, what does this mean in terms of what happens from now? We talked before about California, and I think that you mentioned being from California, that looking into California and the ballot measures or whatever it happens to be, the lawmaking steps that happen here is of interest to you. But I think it's of interest to a lot of folks because of the way that California can shape the lawmaking climate. And when it comes to something like this, I think that this is something that sets precedent or potentially sets precedent. So if we could kind of look at past situations as a way to model out what happens next, are we looking at more measures, more propositions in other states, or are we looking at this as a way to set precedent and say, we kind of don't need these propositions anymore because it's been decided? So lots more legal arguments across the country and elsewhere, or do we think that this was the place where the legal arguments had to be made?
Having covered Uber for a really long time, I was in college in Chicago when Uber launched its black car service, and I went to the launch party. So I've been in and around the company since it was a baby little thing. It's always been in legal wrangling. So I don't want to say that the legal wrangling's ever done, but I think a couple of lessons were learned here. One, that you could pass at a state level a bill that tried to reclassify contractors as employees in certain circumstances. But I think that the bigger lesson is that Uber and Lyft, DoorDash, Postmates, and company all learned that they can really leverage their platform and money to push back on this stuff. And so I would expect to see pretty sharp reactions from the same group of companies in any state that tries to kind of get in on their action, for lack of a better phrase, to kind of take a cut of it and make them behave differently. I think it's emboldening. And I think what this also does is give investors more confidence that these companies aren't going to be heavily whacked by state level regulation. And if that's the case, their values go up. For example, DoorDash has filed to go public privately. We're still anticipating its public IPO filing and eventual debut. Well, now when it goes public, it doesn't have quite as much in its risk factor section because it just beat this. So now when it goes public, there's less uncertainty around it. And going back to the top of the show, investors hate uncertainty and they love certainty. So now when DoorDash does go public, people can be more confident that it can operate without having to change its business model or lose margins and so forth. So I think it's a strong win for these companies and their investors. I see more IPOs in the future from these firms, and I think that they have a playbook now to bat back regulation at the state level. If you're a labor activist who hates them, it's a pretty crappy week. But if you're a shareholder in Uber, pretty good one.
All right. Well, Alex Wilhelm, it is always a pleasure to have you join us to talk about any number of things, frankly. It's nice to get to pick your brain. So if folks want to follow you online, where do they go to do that?
Oh, I'm always on Twitter. I'm twitter.com/Alex. And if you want to talk nerdy about the VC world, I'm on a podcast called Equity with some friends at work. But otherwise, I'm occasionally on TWiT and love to drop by, see all these fine folks whenever I can.
Awesome. Thanks so much. We appreciate it.
Thank you, Alex.
Thank you, guys.
Take care of yourself. All right, coming up, Amazon is apparently reinventing the wagon wheel. See what I did there? For distribution of its products. Sorry, I'm a dad. I make dad jokes.
I love a good dad joke.
Yeah, I can't help it. Sometimes they just write themselves. But first, this episode of Tech News Weekly is brought to you by Worldwide Technology. You want safety for your employees, but also the ability to effectively run your critical operations and stay resilient, right? So why not do both? WWT can help you with all of that. Everything from reopening and returning to work, customer experience, remote working, telehealth, remote learning solutions. You can let WWT guide you every step of the way, and you'll be happy that you did. Reopen and return to work. Right now, customers, employees, and patrons need to feel safe in public and shared spaces. WWT actually helps organizations implement solutions that address the unique challenges of hybrid work environments, from managing occupancy limits to rotating work shifts and more. Examples include fever screening for safe reentry, managing and monitoring contact on premise, contact-free customer experiences, and keeping meeting rooms contact-free. As organizations adapt to the new normal, IT decision makers are presented with an opportunity to take a fresh look at their existing technology investments, so you can learn about solutions that will create better experiences for the customer, for call center agents as well, regardless of circumstance. And then there's remote working. Consumer-grade technology helps employees connect with colleagues and execute tasks as if they were in the office. Organizations can now begin to move from urgently responding to a need to enhancing the experiences of their remote workers. Of course, telehealth, healthcare organizations need to rapidly connect with patients remotely to provide virtual care like never before. And technology can empower providers to connect with patients in their homes and at subacute care facilities and temporary care clinics. And then remote learning. So filled with remote learning in this home right now. Now educational institutions at all levels must adapt to teaching students from a distance. And this involves online curriculums and ensures educators and students have access while also navigating remote learning tools and systems. So organizations are facing a new world with totally new challenges right now. Leaders are struggling to know what technology decisions they should make to keep their employees safe and productive while still delivering critical services. Communication for your staff, home setups such as audio, webcams, and monitors are just some of the nuances that can be super overwhelming. So let WWT work out the complexities and provide you with guidance that will not only help you maintain business critical operations, but optimize them for the future. Don't let anything stand in the way of servicing your customers. Contact WWT today to request a consultation at wwt.com/twit2. That's twit and the number 2. WWT simplifies the complex. That's wwt.com/twit2. WWT enabling critical operations for business continuity. We thank WWT for their support.
Folks, plans for drone deliveries by Amazon are only part of the story of the logistics machine that is Amazon. Joining us today to talk about some potential next steps for the company is Paris Martineau of The Information. Welcome back to the show, Paris.
Thanks so much, Micah. How's it going?
It's going well, and I hope it's going well for you as well. Let's talk about this. So Amazon, of course, we chatted before about its drone delivery service and the steps that it had taken to kind of go to the next round of delivery there. But there's some more findings that you've got here about its plans to deliver to rural areas. So one of the things that folks may or may not know is that different delivery companies will deliver to certain areas and then let the Postal Service kind of finish out the process if it's hard to get to those specific doors, those specific places. Amazon, though, is typically, is looking to those companies to do these deliveries. But something that I didn't know, and I'm hoping you can kind of talk to us about this, is Amazon has been for a while working on doing its own deliveries through its contractors. And how much of Amazon's deliveries are made by its own contractors?
Yeah, so this is something I feel like only recently realized over the last couple of months. Amazon, as I'm sure many of your listeners may have seen, now has these Amazon branded trucks and its own contractors, but this is primarily in major metropolitan and densely populated areas. But that accounts for a large percentage of Amazon's overall deliveries. And so right now, the company is responsible for, as of August, upwards of 67% of its own deliveries Amazon is completing itself, which is a major feat for any company generally. But this year, Amazon has been speeding up its plans to expand the area that it can deliver to. Earlier this summer, when it was building out a bunch of different delivery stations, analysts seem to project that, by 2022, Amazon will be responsible for maybe 85% of all of its orders being delivered, which is huge. But that last 15% was rural deliveries. And that's because, when we're talking about rural areas, these are places, like a farm kind of in the middle of nowhere in Montana or something like that. It's very cost prohibitive for most companies, be it Amazon, UPS, or FedEx, to bring a package out there, because, I mean, all you're doing is driving out there and then driving back. So
Right.
in the cases of even these private companies, they outsource to UPS or USPS. But what my reporting uncovered this week was that Amazon is considering tackling that last 15% through this new program called Wagon Wheel.
Yeah. So when you register to vote in Missouri and you put in your address, Missouri's voter registration form has an extra section in it. At least I shouldn't say Missouri because I don't know if it's every county. So in Buchanan County, Missouri, there's a little section underneath the address where you are meant to put in information about where you actually live. So you can be like, oh, 2 horses past the beehive to the left. I kid. I'm from Missouri, but it is, in the country, out in the country, as we call it, you do have to use descriptors like that. 3rd house on the right past the old barnyard. And that is understandable when it comes to these companies that kind of, you fly a plane in with a bunch of iPhones from across the pond and you touch down, and then you also drive those delivery trucks out to all of those houses. No, the Postal Service, because it's required by law to do so, is, kind of typically tends to be the last mile of delivery. But Perez, I just wanted to double down on that. I was shocked when I was reading that, 2/3 just about of its deliveries are made by the company itself. Now, one of the things that we look at here is, why do Amazon and FedEx and UPS choose to use the USPS to do those last mile deliveries, given that FedEx and UPS are that is their job is delivery. And I know I certainly kind of get a little frustrated anytime I see FedEx or UPS use, I think it's like FedEx SurePost and UPS.
Yeah, SurePost kind of bridges that gap in taking it over to companies like USPS.
Yeah, and so Wagon Wheel, I would think that this would be kind of a cost issue, given that these companies choose to just boot it over to USPS instead. So I'm kind of wondering, what do we think the motivation is here? I know Amazon is not known to be quite the money maker. It tends to kind of float around spending and making back just as much as it's spent. But what's the motivation here if this is not necessarily a cost-effective choice?
Yeah, so rural delivery is notoriously cost prohibitive, but for companies like Amazon and to an extent FedEx and UPS, it has become more apparent over the recent years that there is a demand for rural delivery, and there's possible ways that these companies are piloting to make deliveries in those areas without having to incur the cost of going to every single farm in every single county, no matter how many miles apart. This is the reason why you've seen all these various delivery companies and retailers like Amazon and Walmart testing drone programs, because that could be a way to kind of bridge that gap, quite literally, I guess, with a flying package. But both FedEx and UPS have in recent years and months piloted programs where they use central hubs. FedEx, I believe right now, is working with $1,000 Generals, to where if you live in a rural community with one of these Dollar Generals, you could go there and pick up and receive your packages at the Dollar General like it's a little post office. And so obviously Amazon hasn't been the most forthcoming about Project Wagon Wheel. When I reached out to them about the initiative, which I'd also seen in some job listings, they scrubbed the words rural delivery and wagon wheel from their site. But from what my sources tell me, it appears that the program, at least at one point, could take was planned to take a similar shape to kind of the FedEx Dollar General model, to where Amazon would have these centrally located hubs in different rural communities where packages could kind of be delivered to and available for pickup, which might make it a bit more financially viable for the company. But I think ultimately, one of the main reasons regardless of price, that Amazon is probably interested in this, is that offering its own delivery to areas means that it can get packages there a lot quicker and control the speed. And that means that people will be more likely to sign up for Prime. And 20% of America is in rural areas. And that's a part of the market that Amazon hasn't yet been able to penetrate with Prime, which when someone's a Prime member, they spend a considerable amount more on Amazon services.
And all of this, at least for me, really seems to point to, yes, I mean, obviously the like standard delivery, broadening out Amazon's kind of standard delivery approach, 4 wheels on the ground. But also, you know, we've kind of touched very briefly on the drone aspects of things. And in order for a drone delivery fleet of Amazons to work, by and large, they also need all of these points scattered around the U.S. or the, you know, the geography of wherever they happen to be delivering. Do you think Wagon Wheel is kind of a part of that, to kind of proliferate more points, more spokes on the wheel, from which to have these drone deliveries actually be accessible to even more people as well, not just 4 wheels on the ground?
I mean, obviously, Amazon hasn't said anything directly either way,
Sure.
but my opinion, it seems very likely. Since I've first heard about the drone delivery program, from what I'd heard from logistics experts and people who work in the shipping industry, it always seemed clear that drones were never going to be flying in New York City, as funny as that would be. For major metropolitan areas, it just doesn't make sense. There's a lot of easier ways to deliver things to people, especially when you have, 40-some people living in one apartment building. But the one place where drones really do work is in these rural areas where you can cross, a large distance without having somebody spend a bunch of gas and time going to each and every house and back. So yeah, I mean, I hadn't thought of it till now, but you just said that. But it certainly makes sense that these hubs in the Wagon Wheel could be a good launching pad for any future drones once we get to that place.
Sure.
Both literally and figuratively. Paris Martineau, I want to thank you so much for joining us today and walking us through Amazon's latest to get those packages to us. Thank you so much. And if folks want to follow you online, follow your work, where do they go to do that?
Yeah, you can follow me on Twitter at Paris Martineau and read my work on the information.
Awesome. Thanks so much. We appreciate it.
Thank you, Paris.
Thanks so much, guys.
Up next, it is time for our stories of the week. But before we get there, this episode of Tech News Weekly is brought to you by CashFly. CashFly is a CDN that has been innovating content delivery since 1999, and we've been using them here at TWiT for more than 10 years. Do your current S3 bills have you ready to call for help? Well, let CashFly's SOS be the answer to your SOS. CashFly's storage optimization system, clever, is a dedicated storage space for only you. How does it help? Well, SOS allows you to keep your data and content closer to your customers without your neighbors' or competitors' traffic reducing your customers' experience. You'll save thousands per month by shielding your origin. They'll guarantee no cache misses, so your download speeds will be drastically improved and your data transfer out fees will be significantly reduced. And with CashFly's SOS, you'll get a 100% cache hit ratio. Once you're a CashFly customer, just decide how much storage you need, and they'll take care of the rest. CashFly is rapidly expanding and adding new POPSs globally. With 6 new POPs in South America, they are serving 10 times the amount of traffic in Latin America over last year. They've not only maintained but drastically improved their performance in the region while taking on a much higher traffic load. Whether your end users are in North America, Latin America, the Caribbean, EMEA, or APAC, their goal is to deliver content quickly and reliably, even in those hard-to-reach regions. You can expect consistency and performance in the Americas or anywhere else. Because of their reliable throughput and scalability, they are up to 5 times faster than other CDNs. In fact, SOS is backed by CacheFly's 100% uptime SLA guarantee and its industry-leading global performance. SOS easily and reliably improves video streaming, podcast platforms, and digital downloads, and will scale to a global audience of any size. Files will be delivered lightning fast, and content will be delivered quickly and reliably without delay or timeouts. CacheFly is capable of handling all kinds of traffic surges, ensuring your content is delivered with ease. It ensures that cache misses are delivered 5 times faster than from your origins for software delivery, and games will be downloaded hyperfast with low latency and a scalable solution. CacheFly also wants to help others in need and is partnered with World Central Kitchen. They donated over $50,000 and have a goal of serving 300,000 warm meals to those who are struggling. With standard powerful throughput, low latency, high cache hit ratio, and 100% uptime SLA, CacheFly is your go-to. Let CacheFly's SOS be your SOS. Just for TWiT listeners out there, CacheFly is giving away a complimentary, detailed analysis of your current CDN bill and usage trends. See if you are overpaying 20% or more for CDN. Learn more at twit.cachefly.com. That's twit.cachefly.com. Thanks so much to CacheFly for sponsoring this week's episode of Tech News Weekly. Alrighty, Jason, what is your story of the week?
Yeah, crack those knuckles. Let's dig into some serious stories. No, I feel like this is the part of the show where we kind of lighten things a little bit. And we step away from the madness, step away from the crazy stuff that's going on out there. And we talk a little bit about a little computer that gave me some feels when it was announced a couple of days ago. The Raspberry Pi 400 was introduced earlier this week. And I don't know, there's something about this that really just brought back some memories for me. But first, about the computer itself. It's a 79-key keyboard that has an improved Raspberry Pi 4 embedded inside of it. And, they've already been selling a Raspberry Pi kind of themed keyboard before, but it was just like a dumb keyboard. You plug it into your Raspberry Pi and you could you'd have the keyboard. This time it's built into it. So it's a computer that's embedded inside of the keyboard, which makes it totally portable. It's got a slightly faster quad-core 1.8 gigahertz ARM Cortex A72 CPU. That's up from 1.5 gigahertz in the Raspberry Pi 4, so it's a little bit faster. 4 gigs of RAM, 2 micro HDMI ports. So with this computer, you just plug in, and it's kind of a bummer that they're micro HDMI, but you can plug in 2 monitors and have a dual monitor setup, a micro SD card slot, 2 USB 3.0 ports, 1 USB 2.0 port. And the computer itself, if you're just getting it, that's the computer inside of the keyboard is $70, which, Raspberry Pi, all their stuff is just incredibly inexpensive, especially for what you get. That's just awesome. $100 if you want to get the mouse, the power supply, a micro SD card, an HDMI cable, and then it also comes with a beginner's guide. So that's like the kit with everything that you would need aside from a monitor to plug it into, of which you could really use anything that's driven by HDMI. So, and Raspberry Pi at its heart, it is a Linux computer, so you got to be okay with the fact that you're running Linux. Although you could, there are people that are putting Android on there. If you really want to run Android on your on your Raspberry Pi, you can certainly do that. But I think what attracted me to this was the idea that I haven't seen in a while, I suppose, outside of laptops, which is, a computer and a keyboard, but it also has the monitor and it's maybe a little bit different. But back in the day, I was a huge fan of the Commodore 64. I've talked about it far too many times on this network. And that was definitely a computer built into a keyboard. All you needed was the screen, to plug it into. And so this just kind of takes me back to my childhood of having all that kind of encased inside of a keyboard that's super portable. And I just love the idea of it. And the fact that it's $70, like that's cheap enough to not really care that much. And boom, you've got a computer. So I think it's neat.
I love the accessibility of that to provide a computer. And then, just like you, there's something very delightful about it's all right here in this keyboard. It sort of feels, I can't remember what movie it was, but I remember watching some movie where they had this hacker character and the hacker rolled out this fold up keyboard and plugged it in and got to hacking. But I love the idea of I could just pull this out of a bag, put it down, plug it in, and suddenly there's an entire computer there. It's kind of delightful.
Yeah.
And then, like I said, it's a Raspberry Pi, which is, there's so much to do with those. And I've got one running as part of my smart home setup.
Nice.
And so I really like what Raspberry Pi makes. And this is cool. And I can't wait to see kind of how different people end up using this in ways that maybe even Raspberry Pi didn't expect. That'll be interesting.
Well, it sounds like they have said that this is made for anyone who wants to tinker, of course, but they say children, adults, and even businesses, although they do admit that the color schema of the device, which is, it's kind of like a pinkish red and white, it's totally the color of all their products for the most part, that might not appeal to many businesses. That they, as much as it would break their heart, they would make like a black and gray version of this so that businesses could bring it in. Because I mean, it does support dual monitor setups. It's just an inexpensive way to bring a Linux computer into your environment. Maybe it would be good for kids who are, distance learning at home and want to save a few dollars or don't have the money to drop on like a $500 tablet to support,
right.
Or something along those lines. So maybe this would be a good alternative to save some costs. So you could do a lot with something like this. I've always wanted to take a Commodore 64 shell with a keyboard and everything and remove the insides and put a Raspberry Pi in there in its place and have it be the ultimate Commodore 64 with like everything that I remember having as a kid, So when I saw this, I was like, oh, they should, of course they'd never do this, but they should make a Commodore 64 version of this with a unique Commodore 64 keyboard layout that only, 5 of us would buy, but I'd be there. I would be first in line. I would wait outside the Raspberry Pi Foundation in order to pick up one. So I love seeing the creativity here. I think it's neat.
So in another moment of nostalgia, Disney Plus has released a trailer for the Lego Star Wars Holiday Special. This brings together 2 forms of nostalgia. One is Lego Star Wars, and I know that there's still some Lego Star Wars games out there, but for me, that harkens back to years ago when, as a kid, I remember playing with my siblings a Lego Star Wars game. And that was delightful at that time. I still kind of like enjoyed playing video games, and we would all kind of take turns trying to beat the levels. And so that just brings me back to good moments with my siblings, and also Lego Star Wars, its unique style and its kind of quirky nature, I think pairs perfectly. Now I sound like I'm a judge on a cooking show. Oh, the scents pair perfectly. But the quirky nature of that pairs perfectly with the quirky nature of the Star Wars Holiday Special, which came out in 1978. It's a little more polarizing, the Star Wars Holiday Special, but some people still to this day like it despite how ridiculous it was. And I kind of fall into one of those camps when it comes to movies, TV shows, whatever. Yes, it may not be the serious deal, but there's something kind of fun and enjoyable about something that's just uniquely bizarre. And I think that's one way to describe the Star Wars Holiday Special. So Disney Plus is coming out with a Lego Star Wars riff on the Star Wars Holiday Special. And I am looking forward to seeing that. It is supposed to come out on November 17th, so not too far from now.
Heck yeah, I'm all about this. My kids are going to be super excited about this too. There was the Lego movie, and then there's Lego Batman movie, and I have to say both of those movies are actually pretty excellent.
They were enjoyable. Made
for kids, but adults can enjoy them just as much, and great sense of humor. So I look forward to anything that they do. And this looks awesome. I know I'll be interested. We'll be watching it for sure. The idea of a Star Wars, I like that you threw back to the Star Wars Holiday Special, because I completely forgot about that one. This really is like a combination between the two. I wonder if this is going to go down in the history books as one of those, 50 years from now. We gathered around, we watched The Christmas Story, followed up by, a nice trip down memory lane with the Lego Star Wars Holiday Special. Not sure where it will fit in the realm of that, but it looks good.
We'll see. We'll see.
I am game. All right.
Well,
we've reached. Yes.
I was just going to say, I am game for wrapping up the show.
All right, let's do it. Let's do it. Sorry, didn't mean to squash you on that one. Tech News Weekly publishes every Thursday at twit.tv/TNW. That's where you can go to subscribe to the show in audio and video formats.
And of course, be sure to follow us on social media. We are at Twit on Twitter, at twit.tv on Instagram, and at Twit Talk on TikTok. I am at Mikah Sargent on pretty much all of the social media networks. And of course, be sure to check out my show, Hands on iOS, which will be coming out a little bit later today. I'm talking about Apple's new bundled subscription service, Apple One. How in the world do you just subscribe? How in the world do you choose which subscription you want? How does it all work? I will be answering that question for you later today.
Right on. And I'm at Jason Howell on Twitter. Hands on Android, new episode published today. Thank you, John, for turning that around and getting that up on the site. Home Control Center. So my idea was to use an app that Google has that ties assistant features into one-tap widgets on it's called Action Blocks, onto your desktop, onto your home screen. And my thought was, we all have these old devices laying around. What can we do with those devices? Oh, well, using Action Blocks, you can make a home automation control center out of that device and maybe get creative, hang it up at your front door or whatever, and have one-tap actions that control your entire house. So I went down that rabbit hole, and that's at twit.tv/HOA. You can check that out and see what you can come up with. I'd be very curious to see. Thanks to John Ashley for being at the studio and switching the show and editing after the fact and being so busy every single Thursday. We appreciate what you do. Also, thanks to Burke for helping out behind the scenes. And thanks to you for watching and listening. We'll see you next week on Tech News Weekly. Bye, everybody.
Goodbye.
Be sure to check out the other shows on the network, like my other show, Hands on Wellness. I love to share different tips and tricks that's going to help you get a better grasp on your personal wellness. Just go to twit.tv/how and subscribe now.